When someone asks me what actually happens when you invest, my answer is simple. Over time, your money grows exponentially. Now, if you just let your cash sit in a savings account, inflation eats it alive. Inflation typically grows at around 2 to 3% every single year. That means your hard-earned money is slowly but surely losing its buying power. But if you invest properly and, I mean invest, not gamble, you can grow your wealth far ahead of inflation. A lot of people think investing is just buying something and hoping it goes up. That's not quite it. Investing is about owning a small piece of a company's earnings. When that company makes a profit, you, as a shareholder, get to share in that growth. Of course, if you choose a company that doesn't do well, you can lose money. That's the risk. But the real magic, the part most people miss, is compounding. Imagine you invest $1,000 and it doubles to $2,000. Great, but if you leave that money invested, it starts to compound year after year. That initial $1,000 can turn into $17,000 or even more over time. This isn't because you worked harder for it, but because time worked for you. That's the fundamental difference. Most people are busy chasing money. Investors let time build their money for them. Now, let's talk about risk. Because yes, you can lose money, you can even lose all of it. But you can significantly reduce that risk. Instead of trying to pick the next big stock, you can invest in broad index funds. Like the S&P 500, this fund tracks the 500 largest companies in the U.S. economy. So, instead of betting on a single horse, you're investing in the entire race. You're betting on the overall economy to grow. Think of it like this. The economy is a train that is constantly moving forward. If you don't invest, you're just standing at the station, watching that train disappear into the distance. Investing is your ticket to get on board. As the economy grows, your wealth grows with it. And one day, you'll look back, just like you look back at 2016, and realize how fast time flew by, and the year 2040 will be here. You'll either be so glad you bought that ticket, or you'll wish you did. But here's the most important rule. Don't invest money you might need soon. You absolutely must have a 3 to 6 month emergency fund first. Your rent, your food, your gas, all of that needs to be covered. Once that's secure, then you can invest what you can truly afford to leave alone for the long term. It's always better to be on the train than to be left at the station watching it leave. Thanks for watching.